Hey guys, Ruben and Yeti coming at you today with our little series on Insurance 101. We talked a little bit last week about how to shop for your insurance and what to look for and the things that you need to be aware of. Today we're just going to kind of go down the line of the basics of an insurance policy for your car. We'll start there and why you choose what you choose. Um, you know, have you ever gotten an answer from a customer, Yeti, where you say, I got your declarations page here, and we're looking to see what, why you chose what you chose. And you got their liability limits, and you ask them, why did you choose these limits? What do you normally get?
I usually get two answers. I have no idea, or that's what my agent gave me.
That's what my agent gave me. So the first thing you should know is the purpose of your liability limits. First of all, there's a state minimum. That's what the state requires you to have when you show your proof of insurance. And the reason that they have that is so that you can protect yourself against any kind of lawsuit if for some reason these other people that you hit are hurt or you damage their property. It's your fault and you're responsible for paying that bill. Well, that's what your insurance liability limits are for. So the first thing you want to look at is, what do I have to lose? So you need to look at and know what your net worth is. Let's say, for instance, you have a $200,000 home, $60,000 worth of cars, maybe a 401k that's got a few $100,000 in it. Maybe you own some land for, whatever the price is. Your liquid assets, what you have in the bank, your 401k, your IRAs, savings accounts. Only thing that's really protected there in the state of Arkansas is typically a life insurance policy or a properly written trust. And life, yeah, that's good. Outside of that, everything is exposed. Even if the judge doesn't take it from you, they can actually put a lien on it so that you don't actually earn any money when you sell it. The money goes to that other person. So that's important to know. So even though you might not lose it in a judgment, you could still not gain anything from it if you sell it. So let's say, for instance, that number comes up to $350,000 or $400,000. What would you recommend to a customer to put as their liability limits?
Well, if it's at the 350 or 400, the next level up is $500,000 across the board for everything.
Yeah.
That's what I would do. And we like to take it a step further even to offer an umbrella policy. So, because that's just your liquid assets, like making sure that what's yours stays yours. But then if you have a serious accident where, heaven forbid, knock on wood, I'm knocking on wood, guys. You have an accident where you kill somebody or somebody gets seriously hurt and they're in a wheelchair for the rest of their life, or they lose any sort of thing that's, required to get up in the morning. Any of that, you're looking at hundreds of thousands of dollars beyond what you have in assets. So that's what an umbrella does. It protects you against anything like that. Make sure that your stuff stays yours. And if you were to, it's obviously nobody's out to kill somebody in a car accident, but accidents happen all the time. That's why it's called an accident. We don't foresee it happening, but when it does, that umbrella really comes in handy. And we hire, this is for farmers, we can't speak for other companies, but farmers hires, we have our own attorneys that come down here and they fight for you. You don't have to take that out of pocket. So that's another expense that you save yourself when you purchase an umbrella through farmers.
So yeah, when you have that umbrella policy, it extends, it follows you where you travel for something you might be liable for, even in other countries. It extends to your home liability as well. So liability means is that you're liable for some type of bill and you got to pay that bill. And when it comes down to it, you want to make sure that your assets that you own are protected. In a matter of minutes, a judge could take all of those things away because of an accident you or someone on your policy had. So if you've got youthful drivers, for instance, I would definitely raise my limits up. And how much does it cost to go from one limit to the next and double or triple?
Oh my gosh, sometimes it's like $2 a month.
Yeah.
It's crazy. And, to have that with youthful drivers, it is 100%. I don't know if y'all knew this, but 100% from the time they're 16 to 25, 100% gonna have an accident. Whether somebody rear ends them or they knock something over with a car, it's an accident that they're involved in.
Yeah, they're that likely. I'll take those odds at Vegas anytime. They're that likely to be involved in an accident, and if it's their fault, their rates skyrocket. And if heaven forbid there's a serious accident, you could be a liability for something and on the hook. And they can even take your future wages. So even if you don't have a lot, they can actually garnish your wages to a certain percentage until their client is paid off. That's how that works. So make sure that you know what your assets are. What's my net worth? I mean, if you're a college kid right out of school, you don't own anything, you're renting, you got a car that's worth $8,000 and you're just getting started in life, state minimums might be okay for you to start life out with. What are the risks?
I still wouldn't risk it.
Yeah, see, what are the risks of having state minimums, even if you're in that position?
If you kill somebody, at least in the state of Arkansas, it's different for every state, but in the state of Arkansas, you have to have $25,000 per person, and then an aggregate of $50,000. So the most your insurance will pay for anything is $50,000. I mean, an ambulance ride can run up to $13,000.
Yeah. Helicopter ride.
Yeah.
Heaven forbid.
Yeah. So even if you are a college kid, at least try and get a little bit more.
Yeah.
I mean, really, the difference can be cents a month. And I know whenever I was in college, I wanted me some coffee, and Starbucks coffee runs $3, $4, $5 a cup. So for limiting your intake a week to 5 down to 3, I mean, you could have significant
double or triple the
coverage. So,
another risk you have when you have state minimums is when you're looking for insurance, that's frowned upon with the top level insurance companies. They look at that and they see that as a high risk, someone who's willing to take a risk with lower limits, and typically their rates are higher when you try to go get an estimate as a result.
Sometimes with the combination of a low credit score or really bad history and having low limits, you might not even qualify for some companies. I know we're opening up the gates in points on your record, but it used to be if you had bad credit and low limits, you couldn't qualify for Farmers. We are opening that back up. But another point to think about, if you have family and somebody killed your family member in an accident, how much would you sue that person for? And that's the kind of thing you have to think about. There's no limit, but at least with something like an umbrella, you're covered.
Yeah. So those are some of the main things that we'd encourage people to look at when it comes to liability limits, why you choose them, what they're there for. It's not just a number. It's meant to protect your assets. So make sure it's equal and commensurate to what you have to protect.
Right.
If you've got a castle and you've got this huge wall around it to protect it from people coming in and taking your stuff, that's what the wall's there for. That's your protection, your insurance.
And then you build a moat around it.
Yeah, and then you build this, that's your umbrella. So the whole purpose of putting that fence up is to protect you. So it doesn't do you any good to put the fence up only halfway around your property. I mean, it's just opening the gates for people to come in and take what's not theirs. So you think about that when you're shopping for your insurance limits or your liability. If you have questions about that sort of thing, even if we're not your agents, come talk to us, give us a call. We even have family members call us from other states to help guide them through what that process looks like. It's just shocking how much they don't sit down and get to learn about something that is so critically important. Right. So if you have questions about that, come see us here at the Pettis Agency for Farmers Insurance. Give us a call. We'd be happy to help you with that.
Yep, 479-419-5944. If you're out of state, doesn't matter. We can still consult you and let you know what you should be getting. So that way you know ahead of time. You come in with a little bit of knowledge of what you need and what you should have.
Awesome. You guys have a blessed week, and we'll talk to you soon. See you on Mariachi Monday.